Going forward, good evening, everyone. My name is Pawan Kumar Sahu. I handle marketing department at Websol, and I will be your moderator for the day. Before we head into the webinar, I want to give you a small introduction about my company that I represent from. Websol is a part of Wipro back in the days, and we were printer manufacturing division of Wipro. We were specialized in printer categories. Over the years, the company decided to step out of Wipro and formed a separate entity called Web Solutions, and we also rebranded now as a Websol. So I would like to highlight a few. Over the years, we also expanded our division into Rico, Fusifilm, and all the software categories. Over the years, you can see some of the highlights of our company. We have 20 plus years of industry experience. We have over 500 plus enterprise customers. We are present in over 2000 plus service locations. You can see some of the prestigious awards that we have received from organizations. These are some of the clients that we are dealing currently. So this is one of the work suite that we have. FluidWorks is our intelligent workplace suite catering to wide range of interdepartmental functions. We have gamut of offerings under FluidWorks, which I will be explaining in the next slide. You can see some of the services that we provide. FluidWorks is the intelligent workplace suite. We have managed IT services. We have managed print services. We have ITSS management and services. We also have one of the solution called floTax, which is a GST management platform. It can be used to automate your entire GST process. You can imagine as usually any enterprises file their GSTs through the manual way of doing it through the government website. But we have a solution to automate your GST filing. You can do your usual work in the ERP solution, and it will be automatically filed in the GST portal. Also, we have a platform called floTax, which you can file your multiple GSTs at once. If you want to know more about this platform, I have just launched a poll. You can type in a chat box. You can click yes, reach out to me so that our team will contact you. So this is floTax is a GST management platform, which we will be automating your GST. If you want to know more about GST automation, you can click on yes, so that we will contact you. So with this floTax platform, you can automate your GST filing, reconciliation, e-invoicing, e-way bill, IMS tax automation with AI features. You can simply integrate your ERP solution with floTax, and it will be automated for every function that you do in the ERP. If you want to know more about how automation and AI works in this, you can just type. So we are coming with different AI features also in the floTax platform, so that your GST automation can be integrated with AI capabilities, and you can automate it. The poll will be closed in another 1 to 2 minutes, audience. After that, we can straight out of go to the webinar content. Is it applicable for finance ones? Yes, Nirmal, it is applicable for finances. If you are working in a company with any GST or any tax related things, you can automate your tax. This is actually a GST or tax management solution and automation solution, which you can automate your tax filing, but specifically for the indirect taxes. If you have already, Miss Nirmal, if you are already working in any of the company, you may know the process and you can automate the process. So you can just click on yes, so that we will tell you exactly how to automate your process. Okay, poll will be closed for now, guys. If you still are interested to know more about this solution, At the end of the webinar, we will be having a survey form. You can put your interest over there also. Moving on, I want to introduce our speaker of the day, Mr. Srinivas Arya, sir. Srinivas Arya is a finance leader with over 3 decades of experience in Tata Group across sectors like engineering, components, chemicals, BPO, and leather industries. He has led major transactions in GST and implementation, financial consolidation, and digital finance transformation. As a former group CFO of Pilani and Organics, he centralized global finance operations across UK, USA, and Africa and India. Known for his strategic thinking, governance expertise, and hands-on leadership. It's an absolute pleasure to have you here, sir. Over to you, sir.
Good afternoon, everyone. Welcome to this webinar. Before I start, I'm sure many of you are working in finance and accounts department and then already know the basic awareness of the GST and how GST works out, the importance of GST in the finance field, and also how the organization can benefit the GST Act. So with this introduction, today with this 45 minutes to 1 hour seminar, I would like to explain you on GST time bar and financial closure, stress testing framework for CFOs, and visibility through finance dashboards, vendor compliances, and ITC optimization. So we'll just cover these topics, and also if time permits, I'll run through a case study where how you are going to save the money if you are do your work properly with the timely reconciliations, either with the help of your API tools or software enabled systems, which will give you a lot of comfort and also improves cash flow positions. Next slide, please. Yeah. What is a GST time bar compliance? Earlier, when GST was introduced, there's no such concept of time bar and other things. Of late, again, government is also reviewing every month on the GST council meetings how to fine tune the GST Act and how to improve the GST activities. And recently, in 22nd September onwards, we have seen that a lot of rates have been reduced and compressed to give the benefit to the consumers. Can you make it larger in slide mode? Yeah. So in this GST regime it is more now becoming a technology driven, and also it is more AI dependent. The government is also using AI tools to improve the efficiencies of the GST function and GST returns with the 2A, 2B, 32 and all those things. And every transaction, invoice, and delay is traceable with the GSTN system, making timely filing and reconciliation is very, very important here. The time bar provision introduced fixed deadlines beyond which business cannot claim input credit. Why the word time bar has come means if you are not put the time bar as a restriction, the organizations can keep on claiming the input credit even after 3 years, 4 years, 5 years, whenever the vendor files the invoice. So there's no discipline in system, and government or the organization cannot evaluate how much input credit you are taking an average in every year. So next slide. And what is time bar? We have 3 sections. One is section 16 subsection 4 and section 34 subsection 2 and section 37 subsection 3. The first one says prohibits ITC claim beyond 30th November following financial year. It means suppose a 23-24 financial year is there, the government is allowing you up to 30th November of 24, even though the financial year closes on March 24. It is giving enough time for the organization and also vendor to reconcile and file the returns, file the input credits properly. And then section 34(2) says disallows credit notes issuance after the same date. Means after the 30th date, if any credit notes are issued, that cannot be considered in the portal. Section 37 subsection 3 limits rectification of GST-1 and the same cutoff. It means you cannot rectify GST-1, keep on editing, modifying, and all those things once the deadline of 30th November is completed. So this is a time where after the March, we can say around 9 months period we have, 9 to 10 months period where we have enough time to reconcile our GST inputs versus our vendors accounts and then which vendor is filed, not filed, all that exercise we can complete so that before the deadline, the organization can have a benefit of your input credit. Next. Next, please. Yeah. So here it is financial linkage. How the GST time bar is having impact on the finance and working capital. Obviously, it is very simple that input credit is nothing but your cash saving. So in missing the GST deadline directly affects financial statements, deferred or unclaimed ITC, increase in expenses and reducing the net profit and margins. Suppose you have input credit of say some 80,000 rupees you have to claim. If you're not claimed within the period of November 30 of the subsequent financial year, then you are going to get a benefit or a loss of 80,000 rupees in the P&L account. So that will have impact on your P&L account. And because of that, your cost of production will go up. And what is working capital here is vendor non-compliance delays. You suppose ITC is not reflected to GST or 2B, and it will not give you a proper input. You are binding to pay more tax. You are not able to get the excess benefit of the input credit, and you are going to pay more tax, which result into higher working capital. If companies are borrowing money, they have to pay interest on borrowing also. So every unclaimed credit increases cost of goods and reduces competitiveness, making GST compliance a financial performance issue, not just a tax function. Earlier days, if many of people are there who worked with the service tax or sales taxes, there is no such word called input credit. Either you pay tax or no pay tax. Only at the time of return, some allowable, non-allowable expenditures are less there, like income tax return. But now, after GST input credit and input benefits are passing on to the customers, then the focus more on the GST input credit, where the organization can have a benefit of cash, and government is allowing them to, if you're buying from somebody and you are producing and selling that product, you can take the input credit of that, so that your cost of production will come down to that extent of the input credit. Next, please. Yeah. So the just time bar and financial closure, how it works is year-end closure, financial closure, and GST deadline often overlap. Though we call 31st March as a financial year ending, except the listed companies, the non-listed companies will have time up to 30th September. The audit may continue till 30th September if not extended. Otherwise, it will go up to even 30th November, and this time I think up to 31st October or 10th November they are given. If they keep on extending for some reasons, and our GST deadline is 30th November, which is fixed, then you'll have land up in your reconciliations mess, and you'll not able to get the proper input credits. You're bound to have a risk of your open input credit. And delayed reconciliation risk ITC before November cutoff, and post deadline impact. If invoice is corrected after 30th, you cannot be able to enable the input credit. And finance teams must synchronize their audit and GST calendars to ensure all pending credits are claimed in time. It is nothing but calendar in this sense. You must be having a quarterly closure or monthly review or quarterly review. In those reviews, your GST review is also need to be a part of your regular checklist. So that when your monthly closure is there, how you analyze your trial balance with all the expenses are provided, all the income considered, the assets are being capitalized, depreciation is calculated in a similar way. Your GST input exercise also has to be done. Whether all the output is being properly accounted, whether any credit note, debit notes issues have been considered, how the input credit is been factored in your GST account to books of accounts. You have to reconcile that to get a proper input credit availment. Next. Yeah, the testing. This is called stress testing. Like human beings, every say example nowadays, even I can say 25, 30 years, people also need to go because of this lifestyle. Otherwise, earlier days, 40 or 50 years, every year they have to go for a medical checkup. In medical checkup, there's a one test called stress test, treadmill test, which is nothing but how your heart is functioning effectively and efficiently to ensure that you live longer. Similarly, the finance also having a stress test. The stress test in finance word is come from banking industry first. The origin is banking sector because they borrowed from banking to access resilience under adverse conditions. It means every bank cannot have a deposits continuously or loans continuously or advances. they will have mixed bag. So the more advances, more risk, the more deposits, then they have a higher risk because the liability on the bank is more on to pay and do that liquidity issue will come. So then they started doing a stress test to make it that they have a CASA ratio, current account ratio, and all those things to analyze that so that the bank is stable in their financial system. Similarly, GST application, it is implicating here, simulating scenarios where timelines are missed or vendor filings are delayed. So in GST is concerned, 2 points are there. One is you have to file your returns only on time, whether it's a monthly payment, monthly return, or monthly payment, quarterly return. And then your payment of taxes. If it is monthly payment, quarterly return, then you can have input paid up to once in a quarter. In that case, you need to reconcile the previous quarter very correctly to get the right benefit. And then risk measurement measures how well finance processes withstand with the GST time bar constraint. The risk measures is nothing but a strict guidelines for reconciliations, and then a support system is required for doing a reconciliation, whether it's a SAP, Oracle, Microsoft Dynamics 365, or softwares like WebSol, which will enable you to give a lot of time saving with accurate reconciliations so that you save a lot of money. It may be a one-time investment on ERP and systems, but the result is like continuous benefits you are going to get it instead of depending on manual systems. So that will give you a risk analysis where you can find out in your monthly meetings to check whether your inputs are taken correctly, your filing is taken correctly, your compliances are meeting correctly. You can put it as a checklist to measure your risk. Next, please. Yeah, the stress testing framework is identified into 5 parts. One is identify your transactions. All your GST-linked transactions, time bar deadlines such as unclaimed ITC or pending credit notes or debit notes, you need to check it thoroughly. Then map dependencies, identify who delays the GSTR1 filing or internal bottlenecks as explained in the beginning, whether it's a whether we have is not having sufficient team to handle GST or not having proper systems to delay, then we have issues in this. Then you have to identify what is the bottleneck for invoice processing, quantify exposure, calculate potential credit loss if any deadlines are missed, and that needs to be reported to the audit committee and management. Evaluate controls, check overflow approvals, reconciliations, frequency, and compliance calendars. Don't think that reconciliation is a continuous process. At the same time, it is only just year ending. When it comes year ending, we can say all at one time. It has to be a monthly systematic rhythm. We have to do all our reconciliations with the GST portal, GST books of accounts, with the GST 2B or 2A to ensure that our organization is not losing money. And then present the stress test report to management and audit committee for timely intervention, because there's a huge amount of impact. One is on working capital, the other one is P&L account. So for these two, management is responsible for answering to audit committees. So we have to inform them in advance and give a heads up. And if you have any constraints, please speak to them so that they can support with the constraints where you can come out of these issues. Next, please. Next slide. Yeah. This analytical dashboard example, I'll just give you ITC monitoring, where your input credit, how you can monitor, visualize ITC claimed versus ITC available, ITC aging versus credit note issuance trends, how it is moving, whether your book sales in current month and then again next month or next to next month, reverse entire sales by way credit note, again raise invoice, then it will have a lot of indiscipline in books of accounts, and government is also will view very seriously. Then vendor compliances, this is very, very critical risk, I can say. All vendors are not sincere to upload the invoices as they're given to you. So if the next month, if not coming into the portal, you need to chase them to upload, otherwise you are going to lose the money. And then, as I said, integration of SAP Oracle into auto flag and risk credits to nearing expiry. So get some alerts by way of SMS, by way of emails, or by way of your screen saving things, where you can say next 2 days your deadline for input credit reconciliation. Next 2 days is last date for filing your quarterly return. Like that, it has to come into the system. Next. Next, please. Yeah.
It's a poll time, guys. So just to check how Attentively you are listening. I have bring one poll for you. It's on your screens. It's related to the same stress testing that we have just learned. What is the first step in GST stress testing framework? Vendor grading, identifying transactions linked to time bar deadlines, performing internal audit, updating ERP. Put your answers in the poll box, guys. Also, if you have any questions or anything you want to share, or if you want to ask anything with the speaker, you can just type in a chat box, or you have a dedicated Q&A box provided in your settings. You can put your questions, anything related to finance or GST or anything related to the concept. You can ask in the chat box. We are already getting some questions from Sumed. We have questions from others. Be more active in the chat box, guys. You can ask anything related to finance. Keep all your questions. You can ask now also. First comes first.
Yeah, it should be an interactive session. So please raise your questions, ask your clarifications, not necessarily that is a slideshow presentation.
Yeah. So there is a question, sir. This we should take up. What is the GST time bar? It seems.
Yeah, GST time bar is nothing but it is restricts you to take input credit after certain period. So you will not be able to eligible to take input credit, say after 3 years. So you are in financial year 24-25. Your input credit related to 24-25, you will be able to take maximum period of within 3 years. And initially it is up to November 30. Suppose vendor is not filed the return, vendor is not updated the things, then he will have a penalty. And then once he started regularizing it, you can have that input credit within 3 years time. That is called time bar. Similarly, November 30th of the every year, next year is for the current financial year to avail the input credit.
Majority of the audience correctly answered, identifying the transactions.
Yes.
I'm just ending the poll. Over to you to the next slide, sir.
Yeah. Yeah. Now we have to speak on the how we need to prevent. See, anything prevention is better than cure. Even doctors also will say that way. Similar way, preventing your liability, preventing your risk, preventing your cash flow, working capital can be through GST will have a huge help to the organizations. One is ERP GST integration, implement real-time updates between systems. As I said, if you are even if it is Tally you're working on that, there's a independent tools like this Repsol and other things which will help you to reconcile your data, because the larger the data, the more cumbersome. If you have, say, 20 invoices in a month, you will not find much problem. But you have 200, 250 invoices in a month, then you have 3,000 to 4,000 invoices in a year. It's difficult to reconcile output, first of all, and then input. It's not necessary that every sale invoice will have corresponding only one purchase invoice. To get one finished product or service, you need to have multiple vendor invoices. It means you have multiple input credits. You have to assess that input credit is valid or invalid, whether updated, not updated, all those things. So ERP and GST integration is very essential. As I said, vendor monitoring is required. You need to classify your vendors ABC. ABC is nothing but high priority, medium priority, low priority vendors. Depends on the volume or value of your business. Next, calendar alignment, as we discussed earlier, we need to align your review mechanism along with your audits and financial reviews. GST also needs to be included. And then the most important part is training the team. We need to educate by teams to attend the webinars, participate in seminars, and then workshops, allow them to read certain materials related to GST, to get them the subject awareness and pros and cons of GST impact. Once they knows that, then they will be cautious. Okay, because of me, a company is losing so much of money, a company is getting notices on account of non-compliance. So those type of awareness, internal training is also good enough. So you need to put it them and give them on monthly basis. And also nowadays GST is becoming like, every month you need to be an upgrade, because government is keep on coming with some modifications and some corner of the section, some activity rates, products, classification, HSM codes, all that needs to get updated. Otherwise, you will be losing the importance of your organization. That next. Yeah, the reporting part. What type of reportings you'll have and how you need to report. One is board level, that is completely at the high end. GST time bar risk classified as broad level financial exposure, how much you're going to lose, what is the reasons, and how you're going to mitigate that risk, how you're going to give confidence to the board saying that it will not repeat next time. And then your internal audit, you need to be add as one item agenda to audit the GST, because internal audit is again part of the management. They are not outsiders. They will help you to improve the internal processes so that as an organization you will benefit. And then quarterly reporting, as we discussed in that stress test outcomes, we need to report to the management and audit committee. And then ERP checks, whether your ERP is embedded with the GST and GST updates and all those things. You need to cross check and put it in workflows so that if one misses, the suppose prepared by somebody, verified by somebody, approved by somebody before filing the return, then automatically 2-3 eyes will have a cross check to ensure that everything has been captured properly. Next. Yeah. So from this, what are the major key takeaways is your GST time bar compliance has a direct impact on your financial results. And then the predictive risk management stress testing has a productive and quantify risk before the audit so that you do not open a Pandora box in front of auditors. Next, cross-functional collaboration between finance, tax, internal audit. It needs to be in as a compliance culture. It need not be when there's an issue happens, call somebody to audit. It has to be a regular practice and regular process. And then proactive prevention, shift from reactive correction to the proactive prevention for the sustainable growth. So instead of somebody coming and identifying your error and saying that you're not taking an input rate of 10 lakhs, then it will become a issue of discussion. I think you yourself will say, I'm not able to complete this reconciliation because of this is the impact. And you put that in your reportings. Then everybody is aware of it so that everybody will support you to how to mitigate the risk. Next.
Okay, another poll, guys. I have just posted a link in the chat box. You can access the link. There's a poll going on in our LinkedIn page. Just click the link in the chat box that you have. You will be directed to the LinkedIn page where the poll is going on. Put your answers over there, guys. Just open your chat box and you can click on the link. So I'll be reading out for you. What does the GST time bar primarily refer to? Return limit, vendor limit, compliance deadline, invoice limit. So just click on the link in the chat box. You will be directed to the poll and you can put your answers over there. Also, if you want to know more about GST and all the finance related updates, you can follow our LinkedIn page where we will be posting everything related to GST, indirect taxes, accounts, finance, everything into our LinkedIn page. You can just follow our LinkedIn page in the same link that I have provided. We'll be updating every webinar, all the events that we do from floTax into the LinkedIn page. Just click the link in the chat box so that you will be directed to the LinkedIn page where the poll is going on. The poll will be open for another 2 minutes, guys. We can see good number of responses already. Also, if you have any questions or any queries that you directly want to ask the speaker, you can put in the chat box or else you can use the Q&A setting that you have in the settings. We can take up all your questions at the end of the webinar. Over to you, sir.
Thank you. So here I just interesting one case study prepared and we can all have a look on this. It is because of lack of information or lack of input credit properly, or vendors not filing it separated properly. The company lost almost 18 lakhs on account of time bar issue. So I'll just read out this case study slowly. You can understand. There's a company called Gamma Engineering Products operates a complex vendor network. They have around 600 plus suppliers across India. During 22-23, the company faced a critical compliance challenge when several vendors delaying their GST-1 return. This delay created a cascading effect. Input credit remained unreflected in the company's GSTR 2B. Despite having legitimate claim of 18.6 lakhs, ITC was ultimately lost due to Section 64 because of the time bar cutoff, because it's after November they put it. The incident highlighted systematic gaps in vendor management, reconciliation process, alert mechanism within and otherwise sophisticated SAP or S4 HANA and environment is not available. Next. Yeah. So what is the critical timelines? How it is missing the input credit? We start our audit preparation begins and finance team initiates vendor reconciliation process everything in March month. Here you can just for reference purpose I given this just for easy understanding. So in 23 March when they start all this process, April May communication will be sent to vendors requesting GSTR1 filings and copy challans and other things. And November 23 section 64 16.4 says deadline passes, reconciliation incomplete. So November 30 comes, there's no choice. We have to file the returns. We file returns quickly and without even completing our reconciliations. And December, we noticed that because of incomplete reconciliations, there's an input credit to the extent of 18.6 lakhs, which is permanently disallowed. Then in January 24, vendor files belated returns, credit reflected, post cutoff, and it's remained disallowed. I think one of the question is asked in this chat box is related to this. I hope this answers your question, sir. So if the input credit is filed after the due date, after the time bar date, even if the vendor files your data, then you will not be able to get any benefit on that because it's already time is over for that. Next. Yeah, for this we need to find out root cause and financial impact. See, for every problem, instead of hurry-burriedly resolving the problem, initially it may take little more days, but you need to identify the root cause. That 18.6 lakhs, how we lost? What is the root cause for that? Are we having equipped team to do the reconciliation? Are we having proper tools to do identify? Are we getting dashboard alerts? Are we getting proper vendors who are genuine vendors or are a compliance certified vendors who are thorough in their compliances? Or are we taking a compliance certificate from vendor? Are they filing their returns on time and everything? So these are root cause. We have to do the root cause analysis to identify the problem. Then you can work out on the plug-in into the problems. So one is vendor dependency risk. 12 key suppliers failed to file GST. In this company, there are 12 top company suppliers are there. All the 12 out of 22 or 23 suppliers, 12 failed to file their GST-1 within statutory timeline, creating downstream compliance failures. Missing alert mechanism, which is there's no dashboards, there's no alert system that there's a due date, you have to file the return like that. And inadequate reconciliation frequency, there's no either monthly or quarterly reconciliations. Only at the year end, we'll see what is total outcome, output, and total input, match it, and then try to file the accounts. Later on, we come with these problems. And then weak cross-functional coordination. I think this is a very critical point for every organization. GST reconciliation is not just a taxation department and finance department responsibility. It is a combination of administration, procurement, HR, and the operational departments. Why I'm saying administration, HR, and procurement. Administration also works with many vendors like housekeeping materials, security, safety, all those things. And HR, they have a lot of service vendors, management recruitment teams, recruitment agencies, and other things. Procurement, they buy a lot of assets, goods, and other things, raw materials. So all these people has to follow up with their vendors and give the information to timely to finance And then finance team in turn verify that on time filing the returns. So the cross-functional coordination is very much needed. Here we need to add internal audit department is also a cross-functional department for verifying the activities before we file the returns. Next, please. Yeah. What is corrective framework now? One is process enhancements. Mostly GST or 2B reconciliation within 15 days, a month end, you have to keep a target. And then grading the vendors like ABC. And then ERP alerts of credits approaching 60 days credit period threshold, etc. CFO dashboard tracking pending credits and risk exposure in real time. And then policy and training related, as I said earlier, employee training is very much essential. GST cutoff calendar integrated with financial close procedures. In your table calendars, you have to mention, you have to monitor, like 7th is a due date for TDS, 21 is for GST. Similarly, you have to put up your reconciliation timelines also, and comprehensive training for the finance team members, and then clear escalation protocols. If somebody is not understood, they should not put everything under the carpet. They have to go to the next supervisor or next manager or the CFO levels to tell that I am not able to understand, I am not able to do this reconciliation, I need support. And documentation of time bar management best practices. So here we need to put up a documentation also every year, every quarter, how much we are supposed to get it, how much we are getting, why we are not able to avail 100% input credit. We have to put it in documentation process. And the last is governance review, quarterly internal audit reports with the GST time bar risk, CFO's quarterly presentation to audit committee on the stress results, board level visibility and the compliance matrix and vendor compliances performances, continuous monitoring and improvement cycles. See, improvement, there's no end. It's a continuous improvement. Any quality issues are we call as a continuous improvement. When there is nothing they call, there's 99% accuracy, either 100% or no 100% in compliances. You can say I'm compliant 99% my TDS payment. It means you have failed in your compliances. So there's no, in compliance is concerned, there's no 99.9, 98.99, either 100% or no. So we need to be very careful on this compliances part. Next. Yeah, after doing all this study and then your proactive checks and then your deep stick study of identifying root cause, how the transformation results and the learnings are coming. See, previously 83% ITC was recovery rate. Reduction is missing around 2.3 to 4.4%. And after doing that, reduction in missing ITC is from 2.3% to just 0.4%. And there's 74% improvement in vendor compliances. Earlier it was 19% to 5%. And there's an improvement in working capital 85%. Earlier there's impact of 21 lakhs. It is now come to 3 lakhs. And then 100% in audit observations, completely eliminated from 4 observations to 0. So this is how you will get improvements. And this case study is really a practical case study where in one of the companies we did this, we achieved this exercise, and then we put, I just changed the name of the companies and percentages. Otherwise, this is a real, practically we have gone through this issue. And strategic learning in case of for manufacturing leaders, core financial control, GST time bar management must be treated as a fundamental financial control, not merely tax compliance function. It directly impacts working capital and profitability. So the taxation teams is not alone, or they are just sitting on corner of the company and only in the year ending they'll have work. Taxation is form part of finance department and they are form part of the working capital system also. If they don't do tax planning properly, it will have impact on their funds. And then monthly stress testing. Regular stress testing enables early detection of ITC risk. They materialize the financial losses, provide crucial lead time for corrective actions. And then, as I said, ERP integration is very much needed. Now with AI coming into focus, a lot of dependency on system, a lot of data is available. Only we need to validate what is right for us. For that, you need to have a knowledge, you need to have an experience. And then vendor governance. Robust vendor governance framework and dashboards protects liquidity and reporting accuracy. Here, what we need to is when we are selecting vendor, when you are giving a checklist to vendor, you need to ask their compliance certificate on every monthly. Are they filing their return properly on time? Whether all our invoices have been included in input credit or not. Nowadays, all major companies are following this, and they are giving back to their customers with a list of compliances. Next, please. Yeah. So this is a brief explanation.
Yeah.
Now, any questions, just let me know.
I guess we are end of the webinar, guys. It's all yours. If you have any questions, you can ask in the chat box, or you can just type in a Q&A session. You can, if you want to directly ask with the sir, if the question is very complicated to explain, you can raise your hand so that we will enable your mic to directly talk with the sir. So meanwhile, we have some questions in a Q&A box. You can just take it up.
Sure, sure.
ITC time bar not mentioned in GST law.
ITC time bar?
Can you just go through our Q&A box, sir? Someone has
Sure.
raised a question. Whichever is relevant to the topic, you can just pick it up, sir.
What is GST time bar? I think I explained already.
Yes.
Last year transaction vendor has filed return current year by monitoring current invoice date. Can we take the credit? No, here we need to see the period. Which month is it? If it is done before November 30th of the next year, you can take it. But otherwise, you will not be able to take the input credit. So even if they current year, suppose March is financial running, if they file it in June, July, you have time up to November, you can take the input credit.
And there is another question. If any reconciled ITC, even there, when we are closer to 30th November due to vendor default in filing, what should be the treatment for that, and how should we deal with this situation?
Okay. That is, if the vendor is GST return filing reconcile, how they reconcile with GST at 2B to 2A?
Okay. Meanwhile, we'll take it up one direct question from the audience. Mr. Raman Kumar, you can enable your mic. You can unmute and talk.
Sir, very good evening, sir. It's a very good session for us, sir, actually.
Good
Sir,
evening.
I would like to have your this clarification, sir. You said about of the time bar, actually. 16.4 is saying that November, 3 years board is for return filing, my understanding. But there is no ITC time bar for 3 years. Just clarify, sir.
Sure. See, for getting input credit is for 3 years period. For which, if suppose a vendor, as somebody is asked, here in this chat box also, invoice date is 31st December 24, and the invoice date is 30th September. Can we take the input credit? They can take the input credit, because if any data related to the previous financial year, if they missed out in the reconciliation of GST or 2A, 2B reconciliations, then they can avail up to 30th November. And such cases, if the vendor is not filed at all for 2 years or 3 years for whatever reasons, then he files after 2.5 years, which you are not availed any input credit for that purpose. Then you have a privilege to take within the 3 years period, provided vendors has to give a explanation to you saying that why he has not filed the return, what is reasons for not filing the return. You have to take this thing, what is the value of GST input credit on that, all that you have to assess it. Then you have one time opportunity to take the return, that is for the last time bar, 3 years period. So here what happens is, many of the companies, the reconciliation what they do with the 2A and 2B, generally why to reconcile like 3B with 2B and not 2A. 2B is a static number and it is legally valid. So 2B data, if you have any vendor is having a 2B data, you can close your eyes and take the input credit, because that is been updated already in the portal. But 2A data, you cannot take input credit. 2A data is only for reference. Today I may upload 10 invoices, tomorrow I may delete 10 invoices. So it is continuous update happens. So you will not be able to do reconciliation. You have to do reconciliation 2B. If anything is missing during the financial year, and it is uploaded, you identify it and you inform the vendor is filed before November, you can take in that financial year. And the vendor itself is not filed the returns at all completely in last year, say 2 years or 3 years, whatever the reasons. Then you have opportunity to do that. I'll give you an example here.
Yes, sir.
See, suppose it's called blocked after 3 years time bar, may get the ITC get blocked here. Suppose if Finance Act 2023, suppliers cannot file GSTR 1 or GSTR 3B after 3 years.
Correct,
as
sir.
per section 37(5) and other things. If they miss the deadline, their invoice never appear in GSTR 2B, and ITC become permanently blocked.
Correct, sir.
So identify such invoices and quantify blocked ITC. Ask vendor to pay via DRC 03, which is a self-assessment document as a proof to you.
Okay.
And reverse provisionally claimed ITC, and then you book as an expense or recover from the vendor with a different way. You cannot take it as a GST benefit, but you can raise a debit note, ask vendor to repay to you on the GST credit amount, whatever you're missing on that basis. So to prevent all these issues, what you need to focus is you need to focus more on GSTR 2B reconciliation. That will help you to avoid all these input credit avoidances. Because as I explained, GST 2B is completely a fixed monthly information which you can rely on that. Whereas 2A is very dynamic. It changes and keep on based on the upload data of your vendors. So reconciliation must be done only with 2B and not 2A.
Okay, Mr. Anil D, you can ask your question now. Just before that, Mr. Anil, sir, let's take another question from Q&A box.
Yeah.
In case of MSME vendor, we have to pay in 45 days. And can we hold GST amount? GST amount will release after GST amount shows in GST 2B.
No. You have to pay along with that. You cannot hold the GST amount. It will become a compliance failure for you. First of all, MSME vendors, you have to pay within 45 days. Otherwise, you will bound to pay interest and it will lead to compliance failures. Similarly, the GST also you have to pay. You cannot delay the GST amount.
Okay, Mr. Anil, you can unmute yourself and speak.
Yes, Mr. Anil.
Mr. Anil, you can unmute yourself and you can speak. Okay, meanwhile, I have given access for Sumed also. Sumed, you can unmute.
Sure.
Yes, Sumed.
Hello.
Yes, Sumit, please proceed.
Sir, this is Sumit from JL Morrison.
Yeah,
See, I had taken service last year, 24-25.
okay.
I have received invoice
Yeah.
of last year date. Okay.
Yeah.
Now that party has not filed return. Now suddenly that party has filed return in the month of October, and
Okay.
purposely he has mentioned the date, current date, that is October date.
Invoice date.
Yeah, invoice date. Actually,
Okay.
he should have mentioned last year date, but
Last date.
purposely he has mentioned the current date in his GSTR 1, and now it is reflecting in my 2B.
Yeah.
Now, since I have booked the invoice in last year in my books,
Correct.
current year I don't have any invoice.
Right.
So how can I take that
No,
credit?
you have to talk to vendor to modify. He has to raise a credit note for current invoice, and then he has to raise invoice in that for old data. Otherwise, you will not be able to take the input data.
But now, since after 31st October, now he cannot file na GSTR 1. He has already filed in the 10th of November.
You can modify it now because up to 30th November, you'll have a time for input credit purposes.
Achha.
So you can modify it. You cannot
He can
file
amend.
it, but you can modify the return.
He can amend.
Yeah, you can amend the return. You can amend with the corrections, and
Suppose
then put the date.
Suppose if he amends,
Yeah.
it will reflect on 14th of December, right?
Right. That's what.
So
Even
whether I can take
14th of November. We are still in November now.
uh-huh.
So up to 30th
No,
November.
suppose if he amends to
Yeah. You can take that up to November 30th. If I amend before that, if I amends related to previous year, you can avail the input credit. Otherwise, you will not, once it processed, then you will not be able to take the input credit. Hello?
Just
On
Sumit.
14th December.
Sir, I missed your.
My question is, if he amends on 30th November,
No,
it is
you need
going
to
to
push.
reflect on 14th of December, right?
No, yeah, you need to push the vendor. That's where the vendor coordination and the follow-up is required. You cannot leave it to vendor because it's a cash loss to you. And because of
So
its
if he amends on
negligence,
30th November, I can take credit simply, okay?
yeah, you cannot take it. That's why you have to push it. You have to ask him to do it immediately so that it will reflect in
Now it will not come in 2B of October. It will reflect in the 2B of 30th November, right? On 14th December.
14 December. But he has to go back to last year returns. He has to file it because not the current year. Current year one, he has to issue a credit note and close.
Acha, okay.
You don't have any current year transaction at all. How can he raise the invoice?
Okay, so simply I can take the credit up to 30th November.
Yeah, you cannot avail that. So prior to that, whatever the invoice raised in earlier for that month, he can go and put it in the system. And put the input rate. Not in the current year data.
Uh-huh. No, my understanding was that up to 31st October, the 3B which we are going to file on for 30th October is 20th November, right?
Right. That's what I'm saying. That is for current period, current months. But on account of last year, any amendments on account of input rates, they have to do it before 30th November. It will reflect immediately.
Acha.
Yeah.
Okay.
That is nothing to do with the return filings.
Acha.
Yeah.
Okay.
Yeah.
Thank you.
Thank you, Sumit. And sir, we have few questions in the chat box.
Okay. I think Mr. Anil is unmuted now.
Okay, Anil, you can ask a question. Just before that, we will take the chat questions. So they were waiting.
Good evening, sir. Hello.
Yeah,
Sir.
Anil. 1 second. We will take your question. We have a question from Rosalind. We have accounted the credit in books. However, as it's not reflecting in 2B, and the same have been disclosed under temporary reversal of GST at 3B in the respective month.
Yeah. Okay.
So that was their question, sir.
Okay. See here, you need to reconcile your 3B with 2B, not with 2A. And then once you do your reconciliation of 3B, and then identify against sales versus your corresponding input credits or vendor invoices, then you'll able to identify and take the input credits. But again, here timing is a factor. Which period month and which period, which year you have to see. Because GST or 3B, after 3 years, you will not be able to get any benefit on that.
Anil, you can unmute and you can speak. Mr. Anil, you can ask your question now. Mr. Anil?
Hello. Good evening, sir.
Yeah, good evening. Tell me.
Sir, we are a reinsurance broking firm.
Okay.
Like we raise few of the credit notes on the recipients.
Right.
Now, when it comes to audit, GST audit, the authority is asking us to get these credit notes confirmed from the recipients that they have utilized these services, that they have reversed this ITC in their books of accounts. But when asking, most of the recipients are not able to give the confirmation. So what to do in that case?
Yeah, this is a practical problem because many of the sales reversals went through this credit notes. Generally, it has to be accepted because the credit note here is nothing but debit note there.
Correct.
So they may reflect their income or expense, whatever it is, they don't want to reverse back. If you don't take acknowledgement on that, then it will become mismatch. That's why the department people nowadays focusing on debit note, credit notes reconciliation also.
Yeah.
They are saying that we have to coordinate with them and then get that clearly certified by
Yeah.
them, saying that yes, we accept the credit notes.
We are sending so many reminders,
Yeah. Otherwise,
but
we have to go and meet personally, sit with them, finance team or the head of finance, saying that I have got notice. Otherwise, I will be passing on this liability to you. I mean, you have to give a formal legal letter also through your company secretary or legal department, saying that we have received no notice. We have enough number of communications are passed on to you for credit note acceptance. If people are not done, result into so much of financial loss, which will be passing on to you by raising a debit note from our side if you don't accept it in so much time.
okay. And sir, one more thing,
Otherwise, the
like
liability will
we
be on
do,
your head, the department will sit on your head.
we do supply to the Gift City office also, Gujarat
Okay.
Gift City vendors.
Yeah.
So there are they wanted, there's a different requirement. They wanted the endorsement on the invoices what we have raised from the officers, SCZ officers. So
Yeah.
that also we are unable to get it. We asked them. They said our head office is doing it. We will transfer it to them. They don't reply, and it's becoming very difficult, sir.
No, this is, I mean, more of a administrative issue
Hmm.
than this thing, because generally these people will not respond to this type of credit notes and debit notes.
Correct, correct.
Yeah, because that will have impact on their financials, so which they will avoid. Unless there's a pressure comes severely, they'll take it. Otherwise, they'll just ignore it to the extent possible. In the meantime, these time bar issues and other things will come. So they said your approach lately or we identified lately, we are not able to help you. So it depends on your business development team or whoever is approaches the customer. They need to be little proactive there and sit there and get the things done personally. Otherwise, it will not happen. It's
Okay,
a
Mr. Yogesh,
all the major.
Yogendra, you can ask a question. Let's close this with the Yogendra's question, sir.
Yeah, sure.
Mr. Yogendra, you can unmute yourself and you can speak. Mr. Yogendra?
He's still on mute.
Okay, Sumed, you can ask your question now.
Hello, sir.
Yeah, tell me.
See, my vendor is a monthly return filer. Okay, he files
Right.
monthly return.
Right.
He is not quarterly.
Yeah.
Now, if you want to do amendment on 30th November, his return he will be filing on December
Right.
1st to 10th of December, right?
Yeah. Tell me.
So that credit, whether I will be able to take that credit?
Yeah, you can take if they filed it and available in 2B, you can take it the credit.
Acha, pertaining to last year.
Yeah,
Pertaining
pertain
to
to
last
last year. Yeah, yeah. If it is available in the 2B input credit, pertain to last year invoices, mentioning clearly your matches your invoice numbers of the last years, you can take the input credit up to 30th November.
But I think after November it will not come into be na, because 31st October was the cutoff na.
No. Even cutoff month is 31st October by the reflect in portal and available in portal up to 30th November.
Mm-hmm.
Whatever is appearing in 30 after 30th November, it will not appear at all because it will not take. The system
Yes.
itself it takes as a time bar case.
Mm-hmm. Okay.
Anyone else?
Also, audience, I have pasted the link of our LinkedIn page. You can just follow for more updates about our anything related to GST or tax related things. You can people who have inquired for GST demo, GST automation demo, my team will reach out to you. And also after the webinar ends, you will have the survey form. You can put all your feedback in the survey. If you want anything, any topic to be specifically mentioned in the next webinar, we will be doing these webinars every month. So if you want any specific topic to be highlighted in the next webinar, you can just type your inputs in the survey form. Also, the webinar recording and the presentation will be sent to you through email. Please look for that. Thank you so much, sir. It's very valuable information. People also, and audience also enjoyed a lot.
Thank you.
They have solved so much questions also, their own questions.
Right.
Thank you so much, sir.
Thank you.
Let's
Thank
meet
you,
in next
everyone.
webinar.
Thanks for your time. Thank you. Bye-bye.